Welcome everyone, I am Mike Hamilton from Trade the Easy Way, about to give you a short sharp look at the markets for the week ahead. And the interesting points are this: we've got US retail sales on Tuesday and the Fed on Wednesday. US stimulus is approved, but think about it, this 1.8 trillion, $1.9 trillion hasn't even hit the market yet. It's only just been rubber stamped. So if the Dow can fire up to this level without this money even being in the market, what can it do the rest of the year? And are we going to be due a significant pullback at any stage? Let's take a look and see if we can wind this back and get to grips with this and prepare for the week ahead. This is the Nasdaq on the daily chart, and you can see we had this significant 1, 2, 3 wave pullback into key support, and last week we took a while to pick up, hesitated on the Tuesday, pushed up on the Wednesday, and then we're fairly flat towards the end of the week. But I'm looking for any pullbacks into this 600-700 level to pick up and eventually wind our way back up to that 14,000. Who knows, maybe we can break through and make another new high. Alright, so we've got 1, 2, 3 wave correction, 1, 2, 3 wave push higher. So if we can get a pullback here, then I expect that to wave up and potentially take off. Okay, hence the reason why I am so bullish this market at the moment. Most days last week the Dow was almost unstoppable, so we hesitated on the Tuesday, pulled into resistance on the Monday, hesitated on the Tuesday, just pulled back into the Monday range, and then Wednesday, Thursday, Friday, very, very shallow pullbacks. You either jumped in or you missed out. Hence the reason why I spent some time trading the gold and the Nasdaq, because this just took off like I've not seen before. So you had to buy high, otherwise you ended up sitting on your hands stranded. So where can we go from here? Well, I would expect, I'd hope to see some sort of reasonable pullback. This is a ginormous run up here. The last time we did such a run, we started to hesitate. It took us a good week plus, week and a half or more, before we got another push higher. So you would have thought that having got a move up here, that we want to come and rest around about the 500-600 mark. I could be wrong, this could just keep going. So any pullback into that Thursday range, which is about the 650 mark, that may be all you'll see. But so until we get the US Open on Monday, that's the sort of level I would expect. That may be too optimistic. Expecting 500 may be too optimistic. Certainly, you had to buy high last week, but we could well see a hesitation into at least Tuesday retail sales. We're not expecting a brilliant number, so let's see what happens on that one. Don't forget the US is 1 hour ahead. They've gone into summertime already. So we're 4 hours apart from New York, not 5. I think the DAX has already reached a little bit of a limit here. This huge bar here, I think we need to drift at least into part of this bar until we can get another significant lift. The averages, this is 89 and 20, they're disconnected, and whenever you get disconnected they tend to drift back. Alright, so we're getting higher lows, so we need another pullback potentially into the 200, 250, 300 mark, around here somewhere, to wait for this moving average to come up and then connect. If I'm wrong, this is hardly going to pause, and anything into something like 400, 450 is going to be a pullback. But we're certainly end of last week and into this Monday open in Europe, we were very sluggish and reluctant to do any moves. So that makes me think we do need a deeper pullback before that one's going to go. FTSE. UK stocks have been doing well, just gradually grinding higher. So the main support would be, for my money, around about the 6750 level, for us to then potentially shoot up to that 7,000 level. So I would look for that pullback into Friday's decent move, which is now, so that's 730, 740 to complete a pullback and then start to wind up. Gold, I think this gold has finally bottomed. The volumes are not great. I think there's so much focus on Bitcoin these days. I'm assuming that Bitcoin's just taken a lot of volume out of gold. So only pullbacks into around about the 1720 mark, 1710 mark. So you can see all we've done is crashed into this 20-day average, which is sloping down. So if this is really bearish, we're going to crash into that and dip, and then it's a question of what we do around the 1710 mark to see if we have got significant buys in there, and then we can pull up. So that's my plan, to try and aim for a 1710 pullback. We saw 1730 on Friday. So I am holding gold, but I will day trade it on a pullback to that area as well. Silver. Silver, I think, is holding. Same story. Look at this 89-day average down here. We're sitting on top of it. So we can push. I think we'll end up into 27.5. If we can close above 27.5, I think we can go back to 30 and beyond. I think that is a great ball flag, and sorry, it's a messy chart, isn't it? But I think overall these dips are viable. So if you want to get long silver, try and pick up 25.80. It's possible it may go deeper, but I think it's getting ready to go. But don't chase it and don't use excessive leverage. That's my advice. Let's look at Bitcoin, since I mentioned it. It's been on a huge run. So we are pulling back. So the main 50,000 is down there. So you would have thought that we may want to come and retest 50,000. We touched 62,000 over the weekend, I think it was. Currently 56.5. So a good pull down here might happen, and if that does happen, we could potentially wind back to those highs. So if you are going to trade it, my preference is to be very patient and try and hold out for a pullback. It may not pull back, but that's all I can suggest at this stage on a chart that's so aggressive. I mentioned earlier that UK stocks have been holding up very well. This is coming up for 10 past 11 UK time, coming up for 10 past 7 Eastern time, US time. So I'm still looking. I think this is a good basing pattern. We've had a nice couple of nice wave up here. There is resistance up here. So if you're interested in this, you may possibly get a dip into 130. But at the moment, it's not pulling back that far. This is BT, by the way, in case I didn't mention that. If we can get up here, which I think we can, I think we could punch higher and grind towards £192. Who knows, maybe more, but that's my personal preference. That's the way I'm trading that BT at the moment. Rolls-Royce put in 4 billion losses last year. So any pullback into £1, it's a good move up here. You may well see that drift back to £1 before we've got a gap up here at £2. So it's a potential low risk, high reward one, but you must exercise risk management at all times. Don't fill your boots with it if you are going to try and buy a dip. If you are going to try and buy a dip, again, at some stage we may see a pound again. At the moment it's 116. This is the one I posted last week. Been talking about this for quite a while now. I've waited for a pullback because we had a really nice 1, 2, 3, 4, 5, 1, 2, 3 wave correction, and then we pulled back like this. This is actually very bullish. This is a very bullish chart when you see that pull right back into key support in that sort of pattern. I bought at 70.50. I could have got a better price. I think it actually dipped to 68 before picking up here. If you're interested, again, 70 is the big number. We're currently 75, I think around the 75 mark. I would try and bid on a pullback to sort of 70, 71. Otherwise, I've got earnings on the 25th. So, as with any of these suggestions, I would be patient. I would wait for a pullback, and I would not use excessive leverage. All right, I hope that helps. Don't know if it's going to pull back or not, but I certainly wouldn't chase it. All right, have a good week, and I will update you in a couple of days' time. Thanks very much. Bye for now.